Oh, good morning, ladies and gentlemen. My name is Clemens Hillmer, and I'm partner here at Watson Parley & Williams in Hamburg. And I must say, given that the public transport in Hamburg is at the moment on strike, but to see so many cases here is really great to see such a commitment and a real interest in financial leasing in Germany. So welcome everybody. Great to see you here. Today, we are going to talk about financial leasing, and we will, after a short introduction by myself over financial leasing, speak about leasing from a lessee's point of view. That is going to be given by my fellow partner, Chris and Finnern, and then followed by an overview of Japanese leasing, because we welcome Simon Collins, our partner from our Tokyo office here today. And then followed by a panel discussion with Rehder from Bocomm, Mahnke from Elbe Financial Solutions, together with then Simon Collins, and then closing with some Q&As and some final observations. I would also like to mention that today we are recording this session. Yeah, so but I think the recording is just directed in that direction. Yeah, so you won't be seeing. And I also got the first complaints that the breakfast is only afterwards. Yeah? So sorry for that, but this is also like a bit like interval fasting. Yeah, so really get out of here slim and fit. Yeah, so and even smarter than before. So starting with the agenda, financial leasing in Germany, I must say we see quite an increase in financial leasing worldwide, in particular since the 2008 financial crisis. And I think that is partly the perception also of lessors that financial leasing puts the lessor in a better security position and allowing higher loan to value, yeah, and higher leverage. And as lessors, we see different leasing platforms, yeah, mostly from China, and that is great to have Rehder here from Bocomm, as well as Japan and Korea. And we also see some private equity funds, which are very active in that area. And what is in particular of interest is, of course, Japanese leasing, because it is also combined with the tax benefits, yeah, where the Japanese investors can benefit from the depreciations in Japan. And we have also looked now at a structure together with Simon with the double dip, yeah, so allowing the depreciation in Japan as well as German tonnage tax in Germany. So if you're interested in that, let me know. What is a financial lease? So first of all, I must say, in contrast to debt financing, where the financier only has a mortgage, in a lease structure, the financier keeps the title to the asset. Yeah, of course, and ownership is better in that way as being a mere mortgagee. The lease term is long term. The rental profile, fixed and structured payments to repay the lessor's investment, and so that the lessor should not have any residual risk at the end. And then the lessee has call options. Yeah. So first of all, of course, on expiry of the lease, as well as at pre-agreed intervals during the lease term, at a sufficient price to pay the lessor's investment. And what is going to happen if the lessee is defaulting? Yeah. Then usually the lessor has the right to cancel. The lessee has to pay the termination sum, yeah, to repay the lessor's investment, and the lessor is entitled to take back the vessel, to sell the vessel, and the sale proceeds are to be applied against the termination amount, and the surplus goes to the lessee. How would a financial lease structure work here in Germany? And we all know, most of the Germans, of course, know how a German tonnage tax scheme would work. Yeah, so we have a German KG, which is here in the center of the chart. The German KG registers the vessel at the German ship registry. The vessel is being managed by a German manager. Yeah, and then you should be eligible to German tonnage tax. But how does that fit now into a financial lease? The structures we usually see here in Germany when it comes to a financial lease are as follow, namely that the lessor buys the vessel from the initial owner, the German KG, by virtue of an MOA, and then the lessor sells the vessel, bareboat charters the vessel with a call option back to the lessee. And the lessor must be an EU vehicle, EU regulated vehicle. And usually we see Luxembourg or Ireland or Malta, and I think Bocomm and Elbe Financial Solutions are looking at these jurisdictions. So, and because these are EU entities, you can register them as ship owner here at the German ship registry. And because then, if we have then actually a vessel again registered at the German ship registry, and we have a bareboat charter with a call option, under which the lessee will be regarded as economical owner, and the vessel being managed by a German manager, then this scheme also the income of the lessee under the time charter would be subject to German tonnage tax. So that is a scheme we usually see. Another scheme we see is the 1 to 3 rule. And that means if a lessee owns one vessel subject to the German tonnage tax, he can bareboat charter in 3 times the net tonnage of the vessel. And under this situation, he would also be entitled to German tonnage tax. But that is another structure. So I've just described here the normal structure we see. Some selected issues when it comes to financial leases in Germany. The first issue is, this is lending service. This is financial services. Generally, the lessor would require a German banking license. This is regulated business. Unless, one exemption is you would have a regulated EU vehicle, and the second exemption is that is the case of reverse solicitation. What does reverse solicitation means? Reverse solicitation means that it is not the lessor asking or offering to the lessee a finance lease, but it is the lessee asking the lessor for a finance lease. So that is a fine distinction. And you will look at emails where have visits taken place, where were the finance documentation signed, stuff like that. One other issue is the EU emission trading scheme. And as of 1st of January, you know that the emission trading scheme came into effect, meaning that the shipping company is liable towards the EU or the relevant EU authority to submit allowances to compensate emissions within EU waters. And as by default, the owner is the responsible entity towards the authorities, it will usually be the lessor. But one must, of course, say, in particular, when it comes to a financial lease, it is very much in the interest of the lessee that he is being appointed as responsible entity, because he wants to be in control of the submission of the allowances. One further issue is sanctions and transfer of title. And of course, voice break. Of course, we will find sanction provisions in a bareboat charter agreement, but mostly sanctions relating to the lessee. But what is going to happen in case of sanctions against the lessor? And we have seen, of course, cases in the past where, for example, Russian lessors were sanctioned. What is going to happen then? In particular, if it comes to the end of the lease, and where the lessee wants to exercise the call option. In that case, the problem is the payment of the termination sum. And we all remember the case, problems of Russians in London who couldn't pay their gardener because the gardener was not allowed to take money from a sanctioned Russian anymore. Yeah. So what do you do in that case? How can then the lessee still pay the termination sum with discharging effect? And that is something which needs to be addressed in the bareboat charter agreement. For example, allowing the lessee to pay the termination sum on a separate account, on an escrow account. But then there's still one other problem, and that is how will title be transferred then to the lessee after he has paid the termination amount? And there, of course, one can agree in the bareboat charter that the transfer of title is just subject to the payment of the full termination amount, and then title will be transferred to the lessee. But it is, of course, still to be registered at the ship registry. Yeah, and only then the lessee will get refinancing from a bank, yeah, to pay the termination amount. And whether the ship registry will then still record the lessee as new owner, yeah, that should be further discussed in detail. What is going to happen if the lessee defaults? Yeah, in the case of a default by the lessee, of course, the lessor is the owner. He can repossess the vessel. He can sell the vessel. He doesn't need the power to sell. In case of this early termination sum is to be paid, and the lessor can sell the vessel. But also, you must be clear, the lessor is not entitled to the termination sum and the ship. Yeah, but the sale proceeds are to be applied towards the termination sum, and the surplus go to the lessee. So, but what does that now mean here for the German market? Here in Germany, I think we have to distinguish between 3 periods. Yeah, in case of an insolvency of the lessee. So first of all, we have the pre-insolvency period, the first period. Then we have the preliminary insolvency proceedings, and then we have the open insolvency proceedings. So looking at the normal course of a transaction, yeah, you see that the lessee is in a financial crisis. He can't pay the lease rentals anymore. And we see that, for example, the parties failed to agree on a restructuring or on an unwinding without insolvency. Yeah, what would then happen? Invariably, German managing directors will then file for insolvency, because otherwise they will be personally liable for wrongful trading. If they file for insolvency, the insolvency court will then appoint a preliminary insolvency administrator. And the preliminary insolvency administrator will check whether the lessee is really insolvent and whether there are sufficient funds to pay the costs of the insolvency. If that is the case, the German insolvency court would then open the insolvency proceedings and would appoint a permanent insolvency administrator, which usually be the preliminary insolvency administrator. So, but what is now the effect of that on the lessor? First of all, I must say, in general, the lessor as an owner is in a very strong position as an owner. Also in the insolvency of the lessee, because different to a mortgagee, he has ownership. But I must say, and that is interesting, once the managing directors file for insolvency, then there's a prohibition to terminate the lease contract. The lessor will not be able to terminate the lease contract anymore, pursuant to section 112. And also, the insolvency court can order a preservation order. Objects of considerable significance for the continuation of the company may not be returned. And of course, if you have a single asset company, the court can order them. And then once the insolvency proceedings have been opened, then it would also be clear that the lease would continue, and it would then up to the insolvency administrator to decide whether he terminates the lease or not. But always provided that the insolvency administrator is able to pay the full lease rentals. And of course, yeah, he will not. So that will also mean that he will very quickly terminate the leasing contract. Yeah. So what does it mean at the end of the day? And I think there are two important conclusions. Yeah. The one thing is, as a lessor, yeah, then you should then actually terminate the leasing contract before the filing of insolvency. But even if this is not being done, yeah, but only later, it's not the end of the world. The lessor has still strong rights because it will take then delay the process for about, let's say, 2 months, yeah, until the lease will be terminated by the insolvency administrator. And of course, you have then a cooperating insolvency administrator who will then redeliver the vessel, yeah, and you as a lessor, you can then sell it. And so what are the conclusions? Lease financing is an attractive alternative, may enable financiers to provide more finance, yeah, with the same LTV constraints, may improve a creditor's position. And one must also say, this scheme of insolvency is well tested here in Germany since the 2008 financial crisis. And of course, effects of sanctions are to be taken into account. Thank you very much.
Thank you very much, Clemens. Good morning also from my side. My name is Finnern. I'm also a maritime partner based in the Hamburg office. My focus is slightly different. Over the last couple of years, I've been advising many ship owners on their transactional work. That has been for the last years, shipbuilding in particularly, but all sorts of corporate M&A work. But I have a finance background as well. So leasing for ship owners was one of the very natural steps to be taken. And as Clemens rightly said, also in Germany, there's a tendency of ship owners looking into leasing structures, given how the banking environment has been changed. As I say, I have worked on a number of leasing transactions for German ship owners. So therefore, I'm trying to give some flavor to the view a lessee may take as one of the key parties, obviously, to these transactions. Looking at the key contracts, registration in Germany has been touched on, the impact of a refinancing by the lessor, protection of the lessee, and a few further considerations. So one further thought, it might be very obvious, but in my conversations with ship owners who are looking into lease arrangements for the very first time, for them, it's very important to understand they are, as we heard, not the owner of the vessel. And obviously, traditionally, over many decades, they were used to be the owner of the ship, which are not in that case. So as you see, and as we know, we are selling the vessel and bareboat the vessel back. You can do that for new building structures. That is something we see more often, in fact, because if you order your ship in China, for example, we hear from some for Japan later. There is a closer link to Chinese leasing houses if you obviously order, in particular, if you order more than one vessel for fleet structures. But we see also second-hand tonnage being refinanced by leasing structures. On the building side, it's pre- and post-delivery structures, where I have to say pre-delivery structures are quite rare these days. Why? Shipbuilding contracts have usually a high amount at the very end, at the delivery of the ship, and the pre-delivery installments are rather low, so not the 5 times 20 we saw before 2010. Now you have sometimes 40, 50, or even 60% as the last rate under the building contracts, which means usually the pre-delivery phase is being financed by equity. It is available for a broad range of vessel types. So we see bulkers, we see containers, we see multi-purpose vessels. I know that Jens has done a very special offshore vessel in the last year. It is a very long-term agreement usually. So I think some players may do it more short-term. But in particular, if you go to Chinese leasing houses, they have an interest of have a very long-term leasing structure, which is, of course, if you still have the typical owner approach of keeping your vessel for a significant amount of time, in particular, if it's a new building, for a long time in your fleet in operation. So also there, depending on who you have, but if you go to China for leasing structures, they usually do 4 or 8 vessels, so not the 1 or the 2 vessels, just because these Chinese leasing houses are very big organizations and they just need a bit of volume to bring that through the door of their committees. As we heard, Chinese, Japanese leasing houses, private equity, institutional investors, alternative lenders are around to do these structures. So if you then consider to become a lessee, you want to finance a ship, it is indeed a typical, not a typical, it's a Norwegian sales from MOA you enter into. So you sell your vessel based on the form you know from all your second-hand sales and acquisitions, but it's significantly amended. So it will have nothing to do if your S&P broker sends you the standard NSF form with a few adjustments, and then here's your contract. This is a heavily amended document, in particular when it comes to vessel condition, things like that. So it is a finance leasing house which is buying the ship. So they are not interested in underwater inspections, class conditions under clause 11 and things like that. This is covered elsewhere. So this is all amended. You have additional rider clause in that. But what you will see is you have a bill of sale, a power of attorney, commercial invoice, all these sorts of delivery documents you usually would see in a typical S&P situation. I think the link, one of the key links between the two contracts, the leasing contract and the sale contract, is the purchase price, obviously, because you would say, look, I sell to this entity my ship is fair market value this amount, I want to get that amount because I give up my ownership. Of course, in the finance structure, and the way it works there is you have an advance hire payment, which is comparable to your equity portion when you buy a ship under other structures. That means the purchase price is not due in full, but you set it off with your advance hire payment. So under this contract, which is in fact usually a Bocomm standard agreement, but also heavily adjusted because the operational obligations they are with the lessee. So here you have the hire obligation, which means you count daily hourly rate, but you do not pay it like under a charter party, like every 15 days or so. You pay it, I would say, usually every 3 months. So you see it monthly, 6 months, but usually quarterly payment of your hire over this period of time. That is what you have to do as your key obligation towards the lessor. And so this advance hire payment is a certain amount being deducted depending on the equity ratio you're agreeing on, and this is then set off against the purchase price under the MOA. And what you also have, I think, under your BIMCO, I think all the fun starts because you have a tremendous list of rider clauses, which is quite comparable to a very sophisticated loan documentation, and of course covenants, the default regulations, etc. But you also have a kind of usual list of security documents you as lessee grant to the lessor to secure your hire payment obligations, meaning guarantee assignments, account pledges, managers undertakings. I think also here worth to mention, I think there's hardly any leasing structure without a guarantee of a holding company, I would say. That is also if you are in the shoes of the owner who might become a lessee, worth to consider that you have someone in your group, high the chain, a holding company with substance, who is in the position and willing to grant a corporate guarantee to the lessor. And I basically the structure we've seen already, but also if as I say, if you're considering to become a lessee, worth to mention, you keep the operational control, of course, under the bareboat charter, even if you're not the formal owner of it. And you have all your contracts you usually have if you run and operate a vessel. In particular important, of course, the time charter, if we are speaking in the context of container vessels, let's say you, of course, you have to earn the higher you have to pay onto the bareboat charter partner. But there's indicated, but worth to mention, it has been quite a significant education exercise to the German authorities a few years ago, because it's in the flag law that a European Union or even an EWR owner, so a Norwegian entity, can register the ship in the German registry. Of course, the flag law says that has particular requirements, so you need to appoint someone in the country, and it's all in there. But when we the first time were approaching the German ship registry, they were fairly okay and relaxed, but the BSH, the BSH, the Federal Maritime Authority, I think they hardly understood what we're trying to explain them with an Irish company becoming the owner of a ship registered in Germany, because they simply didn't know it. And so it took us, I think it took us ultimately up to the VDR, and they helped us even with the ministry to explain them that this is in compliance with the German flag law. But again, if you haven't done that, an Irish company, a Maltese company, or a Luxco registered in the German ship registry has been, I would say, a few years ago, quite new and special. But nowadays, I would say they have got used to it. But then I think, and you as the lessee, as the seller of the ship, you take care of this as well. So don't believe that the Irish company or the Maltese company is speaking to the registrar at the German ship registry and helping you with the documents. I think they give you a power of attorney and say, take care of it. And then it's ultimately you arranging everything. And of course, you have to apply, if you make a standard application for flagging out for up to 2 years, and then the dual registration with the flag you prefer to fly. Also, if you are the lessee, well, what can happen, or if the lessor wants to refinance? So you would think, well, I'm the operator of the ship, I'm running it, I have my management contracts, my charter, my time charter, and all this sort of things, and I have someone who is my lessor, but it's a bit like my financing, I know from my commercial bank in the past. So fine, 2 parties, that's it. But what happens in practice, leasing companies may try to look into their own refinancing, because they are the owners of the ship. So they go out and speak to possible lenders and seek debt financing, which ultimately would mean a mortgage may be placed on the ship. Your securities may be unassigned to the debt financing lender. Further securities might be granted. And so what should you consider as your position? Of course, you do not want to have any negative impact out of it. And I think just a very few high-level thoughts, given the time we have, you should at least try to negotiate about the costs. So a lessor might be seeking to pass on costs of his refinancing onto you. So it's a negotiating point, a heavy negotiating point. Why should you, could you say, to at least the financing costs? There might be topics like insurance costs, which you shall take on the other side. You're, as I said, you're one step further away from the lender. This is something you should consider. Also seen in practice that a lessee group, a lessor group takes vessels from different lessees in the one financing structure. So getting a loan for 10 vessels, and 4 are from that lessee group and 6 from the other. So be mindful of that. Ultimately, very important is the performance of the lessor may be relevant for your operation of the ship. So I think that is a complex topic. Covenants to be aligned, that is something heavily negotiated from time to time, that the lessor tries to seek and align the covenants on the refinancing side with the lease. But having said that, being dependent on the lessor's performance under the refinancing, very important, quite enjoyment matter. So, and that is something we usually already negotiate at the stage of the leasing agreements, even if the lessor says no, I'm not considering refinancing. That's all fine. I have the money. It's all on our book. But we usually negotiate a quiet enjoyment letter in the form we would accept right away at the very beginning. And this is then a good position to say, look, if and I guess many of you are familiar with the quiet enjoyment concept, but just as a reminder, if you perform as a lessee under the bareboat charter, you have the right to say to the refinancing lender, you cannot enforce your securities. I perform, clear that with your counterpart, not with me. Also, from the lessee point of view, protection under the lease is also quite a special topic you see in lease structures, not really comparable to your bank financing usually, because you should consider you have a SPV on the other side. So it's not like you go to your Deutsche Bank, Commerzbank, HSH, wherever. You have an Irish SPV, a Maltese SPV, which has nothing else than the ship. And before the deal is closed, they do not even have a ship. They have an obligation to purchase the ship from you under the MOA. And I think that is something you should consider when you enter in. And it's a fair point to ask for parent support, which means you ask for someone in the lessor group who has substance, a holding company, to confirm. Maybe sometimes we get a guarantee, maybe it's a comfort letter, but have some protection that you are secure that the lessor SPV performs because it's backed by obligations of a holding company. So that is the topic around parent support and also the control over the sale of the lessee. So that might be comparable with banks trying to sell their loan debts to someone else. So you suddenly have someone else on the other side. Here it would be that the leasing group decides, oh, here are these 10 SPVs in Ireland. I'm just selling the shares to someone else. So you should be mindful that this someone else is within the leasing group, because otherwise you're ending up with a third party you never want to have an agreement with. Also, we heard from Clemens the termination sum. So obviously, I'm more optimistic that this will never happen. But of course, if it comes to a default, you as the lessee have to pay the termination sum up. And you then, if you are able to do so, you can buy back the vessel. So you get the asset against the termination sum. And there are also certain opportunities to protect yourself, and in particular make sure, because they are the owner of the vessel, because usually you have a period where you can act as the sales agent. So you as lessee have the opportunity for 30, maybe 60 days to sell the ship at an amount which is sufficient to cover your termination sum. And if that doesn't happen, in practice, probably that is more the case, because if you have not paid the obligations under the bareboat charter, why you suddenly have a solution for it. But make sure that when it comes to the lessor, then start to marketing the vessel, that of course there's an obligation to have maybe fair market value, maybe best price, arm's length, take into account the value of the subcharter. You may have mitigation of loss and the right to challenge the price. So if they then have found someone who's willing to buy the ship, at least try to get the right under contract that you can make another offer at similar or better price. Maybe things have changed over time. And also a few further considerations. Third-party charters, obviously, container context, but also others. Does your subcharter fit to the bareboat charter? That is something we will all recommend to look into that. Also, more on the practical level, if you're dealing with the selling and buying of ships regularly, condition under the building contract to match with the condition under the MOA and the bareboat charter. But as I indicated, there's no underwater inspection, obligation for clean class when you deliver the ship to your lessor. Yes, no obligation for clean class when you buy it back, because you as bareboat charterer are responsible for the condition of the vessel. So your finance leasing grantor will say, look, that's not my cup of tea if the vessel is in clean class or not. But also bunkers usually included on the both sides, so there is no remainings on board calculation, the sounding, and an extra payment that is at the bareboat charter your ROB then. Also, a tricky one, sale to third-party buyers out of leasing structure. So if you compare it with your standard debt financing, you would say, okay, I sell my vessel, I have a mortgage on it, it comes to closing, and when the right point in time is, everything is tabled, the mortgagee lifts the mortgage and you deliver. Here, you should consider, okay, I have someone other who owns the vessel, and the German KG in our context sells it to someone else. So in fact, either you can arrange for the lessor selling it directly, so the Irish company selling it directly to a Greek buyer, and you as a KG have not even anything to do. More realistically, you have a back-to-back sale, because the Irish company is probably not keen to enter into a contract with the Greek buyer. So what you happen to see is you have a closing of sort of two MOAs. So the redelivery under the bareboat charter, so you get your ownership back, and 1 minute later you sell it on to your Greek buyer, an example. And usually, of course, also one point, make sure, I think you should agree on a non-registered vessel, because you do not want to register a ship for just 1 minute when you want to sell it off ultimately. But non-registration certificates are usually something you know from new buildings, so that is also handled. I think sanctions, Clemens covered already enough. Indeed, all the situation when my lessor is becoming sanctions, it's more also what to consider. German tonnage checks also just underline what Clemens said, it works in practice. And just as a reminder, if you do it more or less for the first time, or with a sort of counterpart, you are not used to it, the term sheet phase might be a bit more important than in other transactions. So we recommend to be very proactive in that phase, because if you, in particular with Chinese leasing houses, something is in your term sheet, it will be difficult to get rid of it when you realize it might be not the right term or topic. Okay, so that was the lessee's view, and hand over to Simon.
Guten Morgen. Ohio gozaimasu. Yoroshiku onegaishimasu. Simon Collins. I'm a partner in the latest Watson Farley office, the Tokyo office. We opened in May of this year, formally launched after a year of trying to deal with the regulatory side of opening in Japan. There's a little clue. There's a lot of regulations in Japan. Yes, very happy to be speaking with you today. Thank you to my colleagues in Hamburg for two things. Firstly, my Guten Morgen was the first bit of German I've heard today, and thank you for doing this in English so I can keep up. Thank you also for the invitation to come, a fine example of reverse solicitation. So very, very happy to be here. So I'm going to talk to you a little bit about Japan leasing. That'll be in your slide deck, just some of the deals that we've done in the market. The first thing I wanted to try and just give you a sense of is the scope, the size of the interest of the Japanese in the shipping market. I haven't put the names up here, but shipyards, you will know folks like Imabari, MHI, KHI, IHI, many, many others in Japan. It's one of the big three countries for constructing ships. Ship owners, again, they like the number three. There's three very large ship owning companies in Japan, and then a host of less big companies. But you all know NYK, K-Line, MOL, and others like that. On the far side, the financing parties, Japan has financing parties, a variety of different types involved in financing ships. The ECAs and the policy banks, folks like JBIC, Nexi, development bank of Japan. The mega banks, MUFG, SMBC, and Mizuho are all active in shipping. And then, I mean, there's other banks that are not described as regional banks, guys like SMTB, Norinchukin. These are all very large banks. Norinchukin is got a huge number of assets. And then the regional banks, I like to tell the story of in Japanese Shakujugo Bank, which is 114th bank. It's named after its license. It was the 114th bank to be licensed in Japan, and it's not the last, right? So there are a lot of banks in Japan, and these regional banks, as it suggests, in the local prefectures, are interested in expanding what they do, doing more US dollar deals, doing higher. Getting some higher return for their investment, and so when they can be brought into a shipping deal as a syndicated lender, you know, that you may see them in there. I think the best example in shipping probably is EO Bank, who are quite active. And then the middle column, the investors. These are the folks who are most involved in the leasing. I'll talk a bit more about the types of Japanese investors in a moment. But you will usually see, if you are a lessee in the leases that we've just talked about, you will typically see the trading houses and the equity arrangers in your deal, depending on what kind of lease you're doing. Trading houses, we're talking about Oryx, Itochu, Marubeni, Mitsui, Mitsubishi, many others. Equity arrangers, folks like JP Lease, SBI Leasing, FPG, JM Mitsui, and Tokyo Century, and NTT-TC, and there's maybe another dozen that I could mention. So you probably met many of these folks, and they are, you know, depending on their risk appetite and what their focus is, interested in financing maritime assets cross-border. And, you know, having mentioned all of that, there's then a whole host of other folks in Japan as well, the insurers, the class society, the brokers, the lawyers, and others. So I often think Japan is a little bit unnoticed when it comes to kind of just the depth and the experience that they have in maritime financing. Okay. So what are they doing in Japan as far as lease finance is concerned? Clemens and Christian were talking a lot about the finance lease in Japan and in Germany, and that's certainly something that the Japanese market can provide. Essentially, it's a debt financing, but structured as a lease. You know, so it's usually some sort of party who is providing financing, who is going to structure that sort of deal for you. So finance lease. You know, why are the Japanese involved in it? Because it's a financing and they're going to get a return in exchange for providing that financing. That's the main reason. That's usually a single investor or a finance party. Usually they're not going to take the residual value risk, as was highlighted earlier. They're looking just to hold title while the financing is going on, and at the end of it, they're going to expect you to take the ship back. So finance leasing very much a part of what's on offer in Japan. But there's also these other two products which are leasing. On the far side is the job, the operating lease. Essentially, this is a selling lease back product, but at the end of the day, the person who has the lessor is expecting to keep the ship. It is an operating lease. There are some tax benefits to the Japanese owner for being involved in this product, and it's one of the reasons why the Japanese operating lease is often very well priced, because the lessor is going to be able to get some tax depreciation and share the benefits of that in reducing the rentals or increasing the day one purchase price. So yeah, residual value risk very much stays with the job lessor. And it's a very flexible product, just as any operating lease. You know, you can restructure, you can terminate early if you want to, whatever. It's basically, very, very easy to change, chop and change. In the middle is the JOLCO. The JOLCO is a very specialized product in Japan. It's what I've built my practice around in Japan over the last 15 years or so. In Japan, this must be an operating lease in order for it to work. Okay, so unlike what was described to you for financial leasing in Germany, as far as the Japanese are concerned, there must be some residual value risk in this for the lessor. It can't be a full payout. It can't be a purchase obligation at the end. It has to be structured as an operating lease. However, as we'll go on to talk about a little later, we do put a series of features in there which bring it very, very close to the line. It is a very highly structured product. But what you get out of this is 100% financing. And let's say it's done with a typical 70-30 debt equity split. Your debt is market price and your equity will probably cost you less than 3%, maybe closer to 2%. So it's a very well priced product at 100% day one pricing. Okay. Maybe some of this has already been covered, I think, by Clemens and by Christian. But you know, why do we use lease finance for ship? It's well established. You get good leverage. There's often no LTV, no loan to value covenant in the documentation. You can structure on or off balance sheet depending on what you require. Pricing is often good, especially for the equity. And it's available for many types of ships. I'll talk a little bit at the end of this presentation about what's going on in the new building market for the JOLCO. But on the whole, you can do new ships, secondhand ships. Not every Japanese investor has interest across the full sector. So, you know, some may prefer to go with container ships, but not tankers. But everything can be done if you find the right counterparty. Not everybody does everything, but everything can be done. So, leverage options. Yeah, so looking at the different types, again, the different types of lease, you have a number of different kind of pricing. You won't always get the same price when you're doing a finance lease or a lease finance in Japan. If you're doing a finance lease, it's going to be equivalent to debt. So you're probably going to get something which is more or less what you would have got had you done a debt finance, right? So if your ship is worth 100, you're probably going to get something around the 70 to 80 region on a finance lease day one. The JOL and the JOLCO, typically they are leveraged. So the JOL or the JOLCO you'll get full price. JOL, you'll get a market price as well, day one. So if that's, you know, you'll sell and lease back, you're going to get a day one market price, full price. And then the lessor is typically going to need a lender to help them make that day one payment. So you're going to see a bank in the deal as well as the lessor. Typically syndicated loans, security trustee, they're looking for security and so on. There's a big difference between the JOL and the JOLCO. On the JOL, the borrower is the lessor and they are responsible for the debt. On a JOLCO, the borrower is the lessor, but the lessee is responsible for that. You're going to have flow-through indemnities and so on, which mean that basically, although the borrower, because it has to be structured this way, appears to be the lessor, in fact, it's limited recourse to the borrower, and it's the lessee that's taken on all the obligation. The rents under the JOLCO are going to exactly match principal and interest under the loan. And all of any kind of indemnity that the borrower gives under the loan is backed up by a flow-through indemnity to the lessee. So that's very different between JOL and JOLCO. In fact, to me, that's the main difference, right? If people ask me, you know, is it because you can have a JOL with a call option, but that's not a JOLCO. The call option is not what distinguishes the two products. Really, it's the credit for any kind of financing that really sets it apart. JOLCO has been structured with lots of different types of debt. You don't have to have a group of lenders providing debt finance for that 70%. We've used ECA debt, we've used insurance products, we've used debt capital markets products to provide that 70%. You can marry all of that up with JOLCO equity, and it all kind of holds together. So there's lots of different ways of structuring it. For the banks in the room, can you get involved in this stuff? Can you participate in the JOLCO? There are some tricky bits. If you want to be a day one lender to a Japanese borrower, you need a Japanese banking license. Well, okay, so if you don't have that, then what we used to do was on day two, you'd have someone front it for you, and day two you'd transfer in. So that was fine. But then there's also withholding tax issues. And that has become more complicated in the last couple of years. In order to mitigate any withholding tax on the loan between the Japanese borrower and wherever the bank is booked, you would typically say you need to be a Japanese bank, you need to be a bank, an international bank who books in Japan, or somebody who can benefit from a tax treaty. However, that third category, the tax treaty lender, you can't give too much of the loan to them, because then it leads to accounting problems for the borrower. There are limitations on the deductibility of interest paid offshore. So what that basically means is that third category is now very limited. And in fact, when it comes to arranging JOLCO, nowadays, the availability of debt finances is one of the biggest limiting factors, because there's just not as many banks that can be involved as there used to be. If you're involved in insurance products, whether you're doing an ANPI structure or something similar to that, you also need to have a Japanese insurance company front any kind of Japanese insurance business. Okay. We love these drawings. Here's another drawing for you. What will I say? It's very similar to what has been up on screen already, but I'll just highlight one difference, which is, right, so I'll talk you through the structure, right? We have the lessee. This is the credit for the JOLCO. This is a JOLCO, by the way. This is the credit for the deal. It's going to sell the ship to an SPV, not Japanese, registered owner. And then that entity will hold title for registration purposes, right? But then under an installment sale agreement, it will sell everything but title to the Japanese lessor. That works from a Japanese tax depreciation perspective, right? They then hold sufficient economic interest in the ship to depreciate, at which point they then lease the ship back to wherever the lessee is, Germany. You have everything else is very similar to guarantees here. Here are your investors putting money in, maybe with the banks and the debt. So the only kind of key structural difference to highlight is the presence of this registered owner, who could be anywhere. We've had them in Panama, Singapore, Hong Kong, the EU, anywhere you need it. And just to talk about features, I think this is my last slide, and I have about 4 minutes left, so doing all right. These are just kind of some of the kind of headline features of doing a JOLCO. A JOLCO is kind of very so as I said, it's got to be an operating lease in Japan. The way this works, so you get 100% financing day one, and then you pay it down over a term. The term won't be as long, perhaps, as you might get in the Chinese leasing market. It can't be for too long. If you go too long, it becomes a finance lease in Japan. So there is a kind of a limitation on the tenor, maybe 8 to 10 years. And you put a purchase price in there. That purchase price is known day one. It's backed up by an appraisal, which the lessor will get, but you know day one what your exit price is. You know how much principal and interest you're going to pay. You can see exactly what your payments are over the full course of the JOLCO. Can be fixed or floating rate. The expectation is the purchase option will always be exercised. It must be structured as an option, but the Japanese expect you to buy the ship. If you don't buy the ship, what happens? Well, there's one contractual consequence, and then there's one kind of soft consequence. The contractual consequence is you've got to return the ship to the lessor, and the lessor is going to put as much as possible artificially high return conditions on that ship, right? So they're going to say, well, if you're going to return this ship, I want it painted pink and delivered on the moon and fresh out of dry dock and, everything like this, right? As much as possible, they're going to make it difficult for you and expensive for you to return that ship. And that kind of tries to offset some of the residual value risk. They also try and price the purchase option in a way that over the course of the lease, you are building up equity, and so that purchase option price is also attractively priced. But with the volatility of the residual value risk of the ship, you can't totally offset that. So then you come to the second incentive, which is the Japanese will tell you that if you don't exercise the purchase option, you won't finance another ship in the JOLCO market. And that's, that's a pretty real consideration. Just moving briefly into aviation, we've seen a major European carrier, one of the tier 1 carriers, exercise purchase option for an A380, even though it won't fly that plane anymore and it's just been used for parts. They paid a lot for those parts because they don't want to jeopardize their access to the Japanese market. Limited recourse for the borrower. As I said, it's a financing for the lessee. You do get some limited support from the equity arranger, who will provide a letter of undertaking, but no guarantee. Rentals match the P&I under the loan. So the rentals that you pay under the lease exactly match the P&I under the loan. The flow-through indemnity I mentioned already, right? So if there's any tax indemnities or increased cost indemnities or anything else that the borrower says they have to pay under the loan, you're going to have to pay that as lessee. No voluntary prepayment or early termination. A JOLCO is for life, like a marriage. No early exit, no pain-free exit. If you try to go early, you have to pay a termination sum. That termination sum will definitely pay off the lenders. Also pay off the equity and give the equity some return. Depending on what the trigger is, that return can be high, middle, low. But yeah, it's expensive to break and very difficult to restructure, really difficult to restructure. We had some cases where folks were trying to restructure during the pandemic, for example, and if they had like a fleet financed and some stuff was done in the JOLCO, we would tell them, go do everything else first and come back to the JOLCO if you're still in trouble. It's hard work. No LTV. Probably only do one vessel per JOLCO. You can do more than one JOLCO, but you can't do a fleet in a single deal. You would have to have back-to-back JOLCOs for that. And we've talked about leverage. You can also have different currencies, right? Particularly if you have, access to Japanese yen, that's very attractive to the market. You can do a dual currency thing. My last slide. Sorry, I forgot about this one. There was, some of you may have heard, tax reform in Japan in April of this year, which was targeted at JOLCO for new building ships, and basically saying, so prior to this tax reform, if you're doing a JOLCO for a new ship, you were relying on special depreciation, if you like, bigger than usual depreciation to drive the economics of the deal. That has basically been taken away for any ship being constructed outside of Japan. It is still available for ships constructed in Japan if they can get the certification, which is not an easy process, but it's available. Special depreciation is still available for advanced vessels, these vessels which are built with very high sort of eco specs. And yeah, we haven't seen much of it happening yet. So the special depreciation was taken away, and it was assumed that that would mean, okay, what's going to happen now for the JOLCO for the new building? And they're still happening. They're still happening because I've been in Japan since 2005. I've seen a lot of changes which have affected the JOLCO, sometimes deliberately and directly, sometimes accidentally. Each time there's a pause and then a realization. And the realization for the Japanese investors, particularly a JOLCO investor who's in it for the tax depreciation, is if you take the best deal off the table, what's left is now the best deal. And so, you know, consistently, as the JOLCO has become, if you like, scaled back a little bit and a little bit and a little bit, it still remains for the Japanese investor the best way of kind of introducing any kind of tax plan into your accounting, and so they come back. And what we've seen quite quickly is that new buildings are still being financed using the JOLCO, even though the Japanese investor doesn't get quite as good a deal. Okay, I've gone slightly over. Thank you very much.
Simon, that was very interesting. Thank you very much on that. We would now continue with a short panel, and I would like to invite Karl Rehder from Bocomm, Jens Mahnke from Elbe Financial Solutions, and Simon here to the front. Yes, sir. All right, okay, yeah, gentlemen, thank you very much for coming today. And yeah, just quickly introduce these gentlemen, which are surely well known. We have Jens Mahnke, who is a CEO and co-founder of Elbe Financial Solutions and providing a leasing platform. And before he was a CEO of Ernst Rosen AG, managing partner at Lessee and Nord Capital Group, and chartering manager at Frachtkontor Hillmer. Then we have Karl Rehder from Bocomm, and Karl is vice president at Bocomm. His focus is on covering industrial clients and European ship owners out of Hamburg. Karl has been with Bocomm since 2018, and before joining the company, he worked for Pareto Security. And then I think Simon is now already one. Shall need any further introduction. So just to start with, maybe this question goes to all of you. Which advantages do you see for lessees when entering into a sale and lease back transaction, and which disadvantages, in particular in contrast to usual debt financing?
Yeah, first of all, I'm very thankful for your whole presentation, because you made a very positive divide of leasing financing, and there's not much there. I think what is additionally positive is less regulated, so we don't, the lessor has not this Basel whatever regulations which they have to follow. It's more like a negotiable solution if there's a problem it's arising, or even during the arrangement of the financing, the flexibility is far higher than talking to banks, at least as well from my experience. I think another big advantage is the transaction speed. If you look at our case, at least, it takes can take only 4 weeks until they have the full financing. It really the bottleneck is the negotiation of the bareboat contract, the financing contract, but with the Well, commercial oriented lawyer like you and Christian, I mean, it should be an issue. So, yeah, I really see that a huge advantage from coming with a project on the table and you have a transaction concluded. It can go very quick in case of necessity.
Yeah, I think we differ a bit from that because we're looking at a bit different segments at the end of the day. I think one of the things that sets us apart as much from the joke or as you, Jens, is that we have a capacity to finance very big transactions. And that's really a standalone thing today. That we're capable of financing transactions that are bigger than 100, 150 million without any issue, and without any syndication risk in there, which takes a bit of complexity away. So I think that's one point. Historically, an advantage has been that we can be higher in leverage than banks can. Now, I would kind of, relativize this a bit in today's market because we're looking at very high asset values. So we need to be a bit more careful on the financing amounts that we provide as well, especially if you look at vessels without time charters. If you have time charters that were attached to a transaction, then we definitely remain at the higher end with leverage that we can provide up to 80-85%. In some cases, even going beyond that, if we're talking 10, 12, 15-year employment against those units. And I think on the structural side, what also needs to be mentioned is that if you look at documentation, what you refer to and what we described, or Christian mentioned before on the back on the right is go with it, the MOA structure. It clearly is, especially for German owners, to be a bit more unusual that typical loan agreement that you find out there. It's especially if you do it the first time. And I know there's some that have gone through this here in the room. It is a bit more work than what you're used to on your standard loan agreement. And you need to be a certain amount to make it work as well.
Thanks, Carl. Yeah, I certainly echo the thought. If I'm looking at the most structured product in Japan, the documentation is heavy. And if you're coming with your standard set of maintenance covenants and insurance covenants, it can take some work to build those in. So I agree with that. I was also, I think I've talked already about kind of the strengths and weaknesses of some of the financing options in Japan. One thing I didn't mention in my presentation, but listening to Carl has just reminded me is, I talked about who's in Japan, and who's not is anybody like yourselves, right? There is no kind of equivalent of Bocomm Leasing in the Japanese market. So if you're doing an operating lease, sell and lease back, for example, with the Japanese, and someone like Oryx comes to you with the structure, Oryx are not going to be the owner. They're going to set up the deal and they'll remain as the kind of a manager. But the owner is going to be one of their investor clients. So I think it's an interesting contrast with what you have available in the Chinese market, where you're very much dealing with folks like Bocomm as like the owner and as well as the manager on the lessor side. The Japanese side, you're going to have some company that you've never heard of that owns your ship.
Thank you. And Carl and Jens, for you, what are the most crucial criteria in relation to the lessee?
I mean, I think it's not a big difference to what the banks are looking for. The counterpart is the type of asset, LTV, charter, is a charter coverage or long or short term. I mean, I think the view of the project is very similar to what banks are having. I don't see a huge difference. It's the counterpart that we are looking at, and this ultimately results in the LTV enterprise.
Yeah, I think on the one hand, we have these type of deals on our side. On the other hand, that's kind of if you look at the two extremes. On the one hand, we have industrial clients who are end users themselves, who are miners, oil majors, utility companies, basically take the strategic bottom utilization of their fleet, and they're willing to take those vessels on their own books. These are transactions where we differ from typical bank financings, because at the end, it's surely, if you want a secured loan by a vessel in a sense, it's a leasing structure, but at the end, it's a financing on the back of the vessel. but you get a corporate guarantee of a major investment grade corporate against it. So it practically becomes maybe closer to a hybrid to a corporate loan that we provide. So there we're talking leverage that is very high, that can go up to 100% of the asset, the new building price, if the new building price is reasonable. The other end of it is more the typical ship finance like structures. And this has been becoming more and more common just simply because the balance sheets of German owners have been improving again. Yeah? And there is more of the consideration that Jens just described, where you look at it like a bank. You say, what's the price of this vessel? And how does it look in historical context? What do we think is a reasonable amount to lend about that? What's our security like if the market goes sour? And what's our position in terms of residual value exposure, where we can take some exposure as well, like as you said in the Japanese market, though we practically take it really. We do not necessarily expect the charterer to exercise the purchase option at term of the lease. Yeah? But we calibrate the option in a way that we feel comfortable with the residual value that we're left with at the end of the transaction. So in today's market, that can sometimes lead to steeper profiles than we saw them probably 2.5 years ago.
And Simon, on the Japanese market, do you see actually, is there a strong competition among the leasing houses so that they also have to look at other regions? Is Germany of particular interest? Why should Germany be of particular interest?
I mean, I think if I look across all asset types, when the strongest credits and the best counterparties come to the market, the competition is fierce. You know, and we see the, you know, tier one credits can put out an RFP and receive, you know, a dozen different responses just from the Japanese market alone. So I think again, you look at the counterparty. You know, are they familiar with the Japanese market? Do they have the relationships? And do they have a proven track record in the Japanese market? And then the credit and the collateral, these are all relevant as well. I think that you know, there is a lot which links the German lessees and the Japanese equity providers, because one of the if you're picking a more structured product like a finance lease or a JOLCO, they're going to want you to hold the asset for term, and so you're looking at, you know, well, the ship owners who are well-known asset players who sell, you know, aggressively in the cycle, they're going to struggle with the financing options other than the JOLCO, the finance lease. They're not well suited to people who want to be able to just, you know, sell because the market's shot up. They're looking and you know, Japanese ship owners are kind of famously, they hold assets, they operate them, they're you know, they want them on long-term charter, they want that long-term revenue coming in. That kind of operator is best suited to the Japanese, and I understand that that's quite a kind of approach taken in Germany as well.
Yeah, thank you. And coming to some environmental issues, how does environmental aspects play a role in the source decision-making process, and also when it comes now to the EU ETS, where actually by default the lessor as owner will be regarded as a responsible entity? Are you already dealing with that in the bareboat charter agreements?
First of all, I mean, again, have a little narrow view on what we are offering, because our leasing structure is very different to Europe, because you have high volume corporate structures, and since our limited amount being able to finance, it's a different view we're having. From this narrow view and talking about our fund, it's a precondition to have an ESG angle on the vessel. So if it's not green, in brackets, green, we are not able to finance. So we have a very fine limitations from our financiers, which is the biggest financer is the equity provider is the European Union, and they have given us a very defined line we have to follow in terms of ESG compliance. Talking about ETS, I have to admit we have been a little bit overlooking the subject. until I talk to you. We started looking into it. The good thing is there are three, there are already clauses being established on the info, and we have now started talking to one of our lessees and to implement this into our financing structure and the open discussion. And it's a solvable problem. It's not like that no one is thinking about it and people are trying to reject it.
And is it then that the lessee would assume the responsibility as, or the
Exactly, it must be a role in the case because after all, we have no control, right? And the lessor, even though we own the vessel or the fund owns the vessel, as you all know, the structure has no control whatsoever about the EPS payments and all the other issues. So we have to put the risk to the level.
And that needs to be agreed in the level chart.
Yes, for sure. It hasn't been agreed yet, as I just admitted, but looking forward, of course, we have to do it.
We're taking a quite similar position there. We see that in the hands of the beneficial owner, who ultimately is the charter of the vessel. Now, have we included that in the documentations that we did already last year? I'd probably defer to Christian, who probably has it in better mind than I do. I don't think we did, because we're taking the topic up at this point.
I'm glad to hear it.
Yeah, I think so.
Not the last one, yeah. That's the last one. Spotting the topic.
So still some work for you guys to be done, yeah. Now, looking at the other aspect, ESG aspects on the assets that we finance. We do not, unlike you, have a mandate where we can purely finance vessels or anything that floats with a green aspect. Yeah, that is clearly not defined as such, and we can look at all the vessels, which we did actively last year, where we refinance vessels that have 12, 13 years of age against a charter down to scrap value. This is classic transactions that we can do. But if we look at the overall volume, most of it is really driven through new buildings at this stage. And there, I would assume, I mean, my colleagues are going to correct me if I'm wrong, but I would say, by gut feeling, about 70% of the total volume we do today are new buildings with alternative propulsion solution that is pre-fitted or high eco vessels. Yeah? So the proportion of transactions that are set to ES or current ESG standards is very small, and it's the short-running transactions that are going to go out of the books within the coming years. And if you take one step back from our perspective, talking to the clients, then we see that decarbonization is one of the main business drivers that we have, especially when you look at this industrial end of the business, where we talk directly to the end users, because they obviously say in their secure strategic volumes that they want to transport, they're in very many cases subject to internal guidelines as listed companies saying we want to decarbonize by 30% by 2030. And so that's driving the process of also looking at shipping, which typically in the total picture of their corporate is very, very small. And when the vessel there costs 10, 20 or 25% more, it's not going to impact their willingness to decarbonize. The goal is set much higher up, and this is executed in shipping, which typically is a minor part of their value add chain.
Thank you. And we have also spoken a bit about sanctions, and looking at the recent geopolitics and the developments. How does it impact your business? And if lessees have concerns, how do you address these? Yes.
Yeah. Again, a very narrow view from looking at our product, since the main investor is the European Union. I'm not really worried about sanctions. Technically, it's the state of France, similar. So far all our deals have been done in Europe with European clients, European trade. For us, it's right now not a real issue. And since our focus is to finance in Europe, so after all, I think we stay in Europe, and therefore it's nothing we're really concerned about. Yeah.
But it's different. That's the way you're going around it, yeah.
Yeah.
Yeah. No, I think there's been a tremendous change there. When I compare to when I started with Bocomm in 2018, this was no subject at all in any client discussions, and it's been a diametrical change. Yeah, it is a topic with every single of our clients today. Of course, everybody's asking for it. The lawyers are advising them to ask for it. Of course, it's being addressed in the documentations, and you have different ways of addressing that. I mean, part of it is to be capable of, as a lessor, unlike many others, to structure with SPCs in Europe, which gives a bit of comfort, although I know that you as trained lawyers say doesn't help much. That being said, you can go on from there. You can provide, for instance, a termination at par, basically on the basis of the outstanding in case of sanctions, so that there is a way out already. Yeah. Now, what we have experienced in quite a few cases now is that, you know, we typically provide purchase options from a certain point in the transaction, on say during the second half of the lease period. Yeah? But no earlier in general than the 5th year of the transaction. Now, many owners ask the question, what's going to happen in terms of, in case of looming sanction risk? Yeah? And well, I said, I taught my team in Shanghai, and I said, can we define looming sanction risk? And it is technically impossible. And you guys, you were actually involved there when we had the looming sanction risk discussion. There's not really a way of defining that in a sensible way. And one way that we've been approaching that is that we said we give early options to take the vessels out, but they cannot be commercial. Yeah. They cannot be exercised because, you know, prices have been going up 10% and now I'm taking back the vessel and just taking a profit, because that makes the deal unprofitable for us. We need to keep the deal. We're a very small team. We have 12 people in the front office doing about 4 billion of investment per year. And we cannot have a turnover of transaction where we do 2-3 year transactions that are being taken out immediately. So what we have been implementing is early purchase options at very high levels, where you have basically a premium that makes it uneconomical to exercise them just to take 10% profits along. Yeah? But it gives at least a means to the client to take the vessel out in case he starts to feel uncomfortable. But this is going to be at the premium, clearly. So that's a way of, you know, addressing that kind of risk. It's not a closed book. It's something that is ongoing, where we keep on talking to our clients, where some of the clients have ideas that we then can implement. It's up for discussion, but it's clearly a topic that we're addressing today, and is being more and more prominent.
Thank you. Happy to advise on that. Simon, now coming to some cultural issues. Yeah. How would you see the cultural issues or cultural differences play a role in negotiations? And also, could you give an example for special cultural issues relating to Japanese counterparties?
Maybe not. I'm not sure. One cultural issue which actually plays back to the ESG conversation. So the Japanese banks, I think ESG in finance is driven by bank requirements, and the Japanese banks are not where the European and the US banks are in terms of driving towards those ESG goals. That said, we have structured some JOLCO, for example, with sustainability linked loans and rebates on equity if certain KPIs are met. So, you know, the market is receptive to that if it's a requirement. Culturally and negotiations, I guess, you know, what I learned over time in Japan is nothing happens in a hurry. And so yeah, if you need financing in 3 weeks, unless you're a repeat customer, it's going to be pretty difficult. I mean, it's a long-term investment of your time. You need to sell your story, your history, your roadmap of where you're going next. It means, you know, 14.5-hour flights around the pole to Tokyo to to go and see people, to sit face to face. Japan is very much a face to face place still. They place a lot of currency on relationships. And then the other thing I would mention is maybe as a lawyer in a negotiation meeting, you can be surprised sometimes when you hit a roadblock, in negotiation, and it can seem to be totally illogical, right? And you can be like, well, look, there's a very obvious solution, a structuring solution. If we just do this, we get around the problem. Damn it, no, you can't do it. And understanding what's happening on the Japanese side, and there's culture, there's also difficulty in doing things differently and explaining that to the investor. Yeah, I think with time and exposure to the Japanese market, you become a bit more empathetic to that process and realize how difficult it is to get too creative on the hoof. It can explain why you hit these roadblocks. Also, everything happens by committee in Japan. So you think you have an agreement, and then you come back and it's like, oh, actually we didn't. Yeah. So patience. Is that a German virtue? I'm not sure. Yes. Yes. Good.
We know that too. Thank you very much. I don't have to ask you about the cultural issues.
No,
that's
strange. Yeah, that's what's going. I'm not start talking about that.
No, you're going to.
Probably worse.
No, we are going Japanese. But kindly, that is of particular interest also for us. What you can tell us.
Yeah, I mean, I could start and say sometimes I have a middle office that I would wish would be a bit faster. Sometimes I would like to get clearer guidance from my credit people when I go on a transaction that give me more security that we would be able to execute. Sometimes I would have liked to have more transparent view on what the senior management actually thinks and how they want to act and develop. Now, honestly, if you take one step back, I'd gladly ask the question to the Western banks here in the room and say, what do you think is the challenges in your execution? I think they would actually be very similar to what I'm telling here. That being said, I think a big part of our job here in Hamburg is to try and make the process of this lease, because it is for many of the clients an unusual one compared to a typical loan process, as transparent as possible. Give a feel on where we stand in the process, what the challenges are, what the risks are to the execution, what matters need to be addressed, and what are the loose ends that we still have out there. And in that respect, I mean, there's different ways of addressing it. And if you're going to ask my colleagues here, they're probably going to tell you that I've been getting on their nerves in plenty of cases because I'm trying to nail it down and say, what's the percentage of execution risk that we have, what's the likelihood of getting this through committee if we make the terms more aggressive, and I have a client on one hand pushing and saying, okay, I need this to be 20 basis points cheaper. And then I go to my guys who say, if you want to go to committee with that, go ahead, try it. But I need to get a feel of how likely it is. And I'm typically trying to work with the client in a sense that I say, listen, we can try. I'm happy to go to committee with that, but then you need to be aware that we go down from a 90% likelihood of getting it through to probably a 70-65% likelihood of success there. And it needs to be, you actually need to work with your client because there's a risk, and the risk is increasing the more aggressive you make the structure. And I think making that as transparent as possible helps to address the cultural and execution challenge that we have there.
Now, Simon, because we are also speaking with the Japanese leasing houses and here also for the European market, the German market, which legal challenges do you think are Japanese lessors encountering here in Europe? What do you see as the biggest challenge?
Yeah, I mean, there's stuff that the lawyers can help with, the regulatory side, the documentation side of that. I think in terms of putting a deal together, it's about connection. That is the Japanese investors and some of the arrangers as well, may not have the international connections that they need in order to meet you, to be kind of at the forefront of your mind when you're looking at putting together a deal. And so yeah, what we tend to find is the most successful Japanese parties are the ones who've got an idea about sales, and they come out, they knock on your door, they have a sales pitch. That is, I wouldn't even say that was the majority of the Japanese market. You know, the folks that you see are the ones that you see, but there's a lot more who just haven't got that together, and they're very passive when it comes to their customer base, and so I think that's one of the big things that holds Japan back, is that not everybody knows how to sell and structure a deal.
Thank you very much. Coming to the last question, just yeah, your predictions with regard to financial leasing in the shipping market. Jens, Carl, Simon, talk with that.
I have the feeling that more people accept this alternative financing. So I do hope and see as well that we see more transactions because people lose a little bit the fear of leasing. I mean, I think the biggest fear is always, as you mentioned, Chris, I'm not the owner anymore. And I think that's the biggest emotional issue why people have shied away from the leasing financing. In addition, we see less banks willing to finance shipping. Another advantage of leasing is, that's why we do especially see more deals, is the fact that we can do construction financing as an alternative. And thirdly, as you mentioned as well, because it's a high LTV. So it's a good alternative. People get to know about it. They lose fear, as I mentioned, and therefore I definitely see more transactions or more people looking into this alternative way of funding.
I think I can agree to that. If I get more at our transactions, then we had a very good year, 2023. I think in terms of volume, it's the best we've ever had, and we see that going on. And the main driver of that is really decarbonization, making the fleet greener. And we see that with the industrials. We also see it with the owners now that some capital has been generated again on that side. Now, I think that also brings the biggest risk in today's market. We are there to finance these people. We have the volume to do that. There is risks out there, certainly geopolitical ones. But in my opinion, the biggest risk today is that as a leasing house, we act for the first time in a boiling hot asset market, which we haven't done in the past. I mean, these shops were all opened in the early 2010s, yeah, sailing through pretty much 10 years of mitigated markets with rather low asset values. And now we find ourselves for the first time in a market with very high asset values. And I think how we're going to address that is going to be one of the key strategic gateways going forward. I think the German banks in the 2000s have set an example how not to do it. And we should hopefully be in a position to address that in a bit more sensible way, especially looking at leverage. I think high leverage is not the solution to everything in a market where you have historically high asset values.
Yes, thank you. I agree. The current sort of high market is definitely a challenge. If I look at what that looks like for the tax lease in Japan, and then I think, well, deals that are closed today, are those purchase options going to be exercised if they're set at current asset values? If we're in a cooler market in 8 to 10 years' time, I don't know. I don't know, and I don't think the cross-border maritime tax lease market has experienced that either. I think the one very kind of positive and interesting development has been the growth of the operating lease model in the maritime space in the last 10 years. I think it's been remarkable, largely led by yourselves and your peers in China, but there are others as well, like Finnern and DFL and so on. 10 years back, it was almost nothing was financed through operating lease in the maritime space. It was banks, CCAs, or cash, and it's been such a vital new source of finance for the industry. I hope it's well established and that we will weather the challenges ahead.
Thank you very much. So yeah, that's it. Thank you very much to the panelists. Let's continue with the Q&As. So if you have any Q&As, let us know.
We know a few waiting for breakfast, so and you disclosed it was a tactic at the beginning, not to serve it before, so everyone is awake. But of course, the chance to speak to everyone. Please.
It's not a question. Just wanted to ask your comment regarding leasing and how you can convince owners in the idea of not owning the vessel. It's even harder. We heard the story of a client in St. George. You're asking to put 5 million in someone else's vessel. So, you know, it's the concept that I'm putting some money to the vessel of someone else. So it's even harder. But, you know, we get there.
Any further questions? I think otherwise, of course, happy to have you here, continue the conversations with the panelists, with us. So Jens, Carl, and Simon, of course, always very much appreciated as usual to also for you good, not just to hear from lawyers what the topic relates to. That's always our approach. So thank you very much for making yourself available for this. And yeah, thank you very much for spending the time with us on this topic and continue to talk. And I do believe the conclusion should be leasing is an alternative for everyone to at least look into. So thank you very much for your attention.